Welcome to Share Talk, the only podcast where investors come first.
Welcome to Share Talk. Today I'm joined by Arthur Millholland, who's President and CEO of Canadian Overseas Petroleum. How are you today, Arthur?
I'm doing just fine, Zach, here in London, and like all of us in lockdown.
Well, yes, you can secretly go out, I suppose, but it's a bit risky.
Yeah, exactly.
Okay, yesterday we had the announcement, a sort of very decent-looking announcement regarding a game-changing acquisition. Could you run us through that?
Oh, certainly. As people that follow us know that we have an interest in a very juicy license offshore Nigeria that we've had for some time. But you know, we've been on the hunt for other things for some time, for some years actually. And what you know, as I mentioned, we're both here in London, and COVID, you know, has brought opportunities in different ways, and this is one of them. As we all remember, in April of this year, you know, oil prices, you know, hit the skids, especially in the U.S., and U.S. oil prices went negative for a day. And what makes this unique and is a game-changing, what is generally for sale in the oil and gas business globally, are assets that have problems associated with them, or they're late in life. This is the opposite, has no problems, and it's basically brand new. So, you know, people have said to me, we started looking at this in September, at the end of September. And we've done our due diligence, and we've been talking to debt providers. They said, what's the decline curve? And I said, there's no decline curve, it's an incline curve. In other words, the production is increasing. And they go, and they pause. They go, you got to be kidding me! How'd you get your hands on this? And so what we did in the press release yesterday, we described the asset and the company that has it, and it's private. It's out of Denver, Colorado. One shareholder, and he's getting on in time, and he's a wealthy fellow, young wife, young family, and he just wants to do other things. But had oil prices not dropped, this wouldn't have been available at all. You know, he financed it with debt, and they started really kicked this thing off with this miscible flood in December of last year, and boy, did it take off. And so he had to restructure himself. So on our deal, we see that there's a component of assumed debt, and you know, we're going to give him some stock, 4 million shares, price to closing, and as well, there's a gap in the middle. And from the discussions we've been having and the nature of this asset, we believe we can finance that across to close this, you know, with debt, and then get it refinanced down the road. The production today from the primary field, and there's two oil fields that come along with it. One is being miscible flooded right now, and the other one will start off in a couple of years' time. So the oil's there. It's not as if this is a drilling play or a, you know, roll the dice type of thing. You know, it's there. It's proved and probable reserves. And so the production from the first field today is around about 1,400 barrels a day. And this time next year, it should be 4,500 barrels a day, or maybe more. And how do we know that? Well, you simulate the production through you know, computer software, and there are two firms that have done it. One, the people that initially engineered it, and our third-party engineering firm that we had look at it, you know, starting off in October, and they come up with the same answer. So in the presentation that we have published on our website, posted yesterday, along with this, in the back there is a graph that from Ryder Scott, is one of the world's preeminent reserve evaluators, showing where the line is, where we are here basically today, or in end of November, and then where it's going to be, you know, in the years that follow, and it just goes straight up. And so, you know, it's based on good engineering practice, and you know, and you know, the definition, and because we're a Canadian incorporated company, we have to follow the Canadian rules for evaluating oil and gas reserves, which are the most stringent in the world. So effectively, in the back of there's definitions of what proven reserves are, and the definition in Canadian terms is that there's a 90% certainty that the oil recovered will exceed the amount of the proven reserves, okay, like that are booked. So in other words, that's to a pretty high standard, and it's much higher standard than what you would say a comparable UK company would have to report by the rules in Europe or in the US, for example. So it's gold plated, and then the next thing to look at is to say, well, what's the net present value? So we have the net present value expressed there on proven reserves and proven plus probable. And again, the definition of probable is very stringent too. And what's the spread between the two? It's recovery factor. Like, so in other words, proved reserves by this miscible flood where they're injecting natural gas and propane into it is at 20% of the oil in place. The probable is just another 10. And as time goes on, the probable will move into proven, and more will go into probable as the reservoir shows how it's going to behave. Now, right now, it's actually performing better than the proven case. And so ongoing, I had engineers in the field day before yesterday in Wyoming, and they're continuing to convert production wells to injection wells. And so that whole process is going. So what our shareholders are going to see is that not only is that because we report quarterly as a Canadian company, not twice a year as you do here, is that on each quarter the production is going to go up, 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 up. And as it increases, because the operating costs are fixed, the netbacks per barrel increase substantially, so that this thing will be profitable, and as well as another field to do the same thing to next door, plus an awful lot of upside. So I say it's a dream come true, and it's we would operate it. We'd be the operator. We've got some good people coming along with it, and as well, there are two other parties that have interest in it, and we believe that we can essentially consolidate the interest in this, either at the same metrics that we acquired it on, or less, and so the minority interest. So it's game changing for us, and as well, another part of this is that we're looking at an opportunity right now in West Africa of an oil field that's been shut in that needs essentially an enhanced recovery scheme put on it, and essentially what's been done on this one is exactly what should be done on that one in Africa, where we can get natural gas for very low cost and propane, which is LPG, to inject in it. And guess what? We're also buying the engineering talent that operationally did this one. Yeah. So in the oil business, it just doesn't get better.
Well, at this point, it would be traditional for me to try and come up with some kind of counter angle or whatever it is. But I think that you explain everything quite comprehensively. If people want to find out more, I'm sure they can contact you or contact your website. But it does sound very encouraging indeed. And let's see how it goes over the next few months, I presume.
Well, Zach, I would say that yesterday, the research oil and gas research analyst at SP Angel put out a morning note, and which I'm sure anybody that watches you can go on their SP Angel's website and get their hands on a copy of it. And basically, he summed it up. It's as good as it gets, and it's like walking into Harrods or Selfridges one day because it's high quality asset, and finding out that they've got an unannounced sale 70% off. Yeah. So, yeah.
Well, I think that's sounds like you've had a great Christmas present there. Arthur Millholland, President and CEO of Canadian Overseas Petroleum. Thank you very much indeed.
Thank you, Zach, for having me. Yeah. Bye.
Bye.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.